a clear foundation for our viewers this morning, and I'd care to know how IRA define insurance fraud. I'm very careful when I say IRA because I don't want to say IRA. How do you define insurance fraud?
All right. Thank you very much, Annie, for having me this morning. It's a pleasure and quite an honor to be here to explain to Kenyans about insurance fraud.
Yeah.
At the Insurance Regulatory Authority, we are established under the Insurance Act. This is a law that establishes how insurance business should be run in Kenya. And most importantly, the authority is put in place so that it can regulate insurance business. It can supervise how insurance companies are doing their business and also promote development. Because without promoting development, then it would be in vain to actually regulate and supervise the industry. And that is why one of the most important things is to make sure there are no leaks in this business, and that is why we are talking about fraud this morning. So the Insurance Regulatory Authority is very committed to ensuring that insurance fraud is prevented, deterred in the market. And when we are talking about insurance fraud, basically we mean it is a deliberate action taken by any person with an intention to deceive an insurance company, so that in the process of that deception, they can either gain financially or otherwise from that transaction. So this really leads to a lot of losses in the insurance company, and it also affects the industry, because when the insurance fraud is perpetrated, that means that insurance premiums will become more expensive, because then insurance companies will use the wrong statistics to make the payment for losses that have occurred. So then it also affects the perception or the trust that people have about insurance in general.
Great. So just expound on that point. Who really commits insurance fraud?
Okay, so insurance fraud can be perpetrated by very many players in the value chain, because we have the policyholders. These are the people who approach the insurance company to buy the insurance policies. So we have policyholders who may defraud, or potential policyholders who may defraud the insurance company in the process of buying a policy or signing up for an insurance policy. This can happen by, for example, giving false information. I may go to an insurance company as a policyholder and purport to have a business that I want to insure, and later on probably forge maybe a fire claim, and in the pretext, the insurance company will be required to pay if, for example, there was no due diligence before that. And that is one of the ways a policyholder can defraud. We have, for example, intermediaries. These are people who connect the customer to the insurance company by bringing in the business. Example is a insurance agent or insurance broker. So the intermediaries can also commit insurance fraud. For example, taking premiums from a policyholder. You want to renew, for example, your motor insurance, which is done annually. They could give you a fake certificate, take your money, but essentially you do not have a cover, because that means that what they've given you is a fake certificate and they have taken your money. We also have instances where, for example, we may have fraud perpetrated within an insurance company, where maybe officers in a company can collude with the fraudsters to make sure that fraudulent claims are paid. So it is actually throughout the value chain, and it is an onus or a responsibility for all the players in the value chain to play their part ethically and properly to make sure that only genuine claims are paid, and also for policyholders to remain vigilant.